Hey, everybody. This is Bob. I got Phil with me for another edition of the Trade Genius podcast. But I got a question for Phil. Have you ever seen The Godfather? What happens when you ask The Godfather for a favor?
Ooh, that's a big debt that you're into.
Yeah, stay tuned. We'll explain.
Trade Genius.
Hey guys, I want to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening. Okay, Phil, really interesting maneuvers this week. We're really going to talk about Powell's chess move after Yellen's chess move with the banks. You know, they start with the depository thing, but something really unusual happened today. You care to explain?
Yeah, so we just, things are unpacking, right, from this last weekend. But essentially, Zero Hedge had made some comments, and basically they were kind of summing up, like, where are we at now with everything that's gone on since the last weekend? So they said basically the big four got even bigger. And really, this came down to small banks having a bank run, exposing the fact that a lot of their longer term hold to maturity assets in the bond market they were just lazy, right? They didn't hedge, even though the Fed said, look, we're raising rates and these things. Basically, they were banking on the fact that they would never have to cash those things out. Well, all of a sudden, people started withdrawing money from banks for one reason or another. And that's another issue too, is this social media now makes that a much more sensitive issue that these guys aren't guarding against, right? Bank runs happen much more quickly now than ever have in the past because of social media and things like that. So people get jittery. Anyway, exposes these banks' balance sheets to the vulnerabilities that they have because, they're underwater on a lot of these long-term assets that they're hoping can make it to maturity. Well, their bluff got called basically. But now what's happening, so it's kind of funny because these bigger banks, this happens every cycle, get to assimilate the weaker entities, right? And essentially that grows their business because they're able to buy these customer accounts essentially. And the Fed's facilitating it because essentially the way the Fed said, well, we're going to backstop some of this stuff and we're going to make these banks that have distressed assets, we're going to make their collateral look good. So then it makes it appetizing for the bigger banks to come in, right? Because they're saying, well, it's not so distressed because basically they're being allowed to value their underwater assets at par essentially for these loans. So I think Zero Hedge has it right. They basically said that once again, banks are going to get bigger, and it's because essentially it comes down to a costless bailout by the Fed because of the special windows that they opened up this weekend and valuing these assets that were underwater at par. So that basically means if you had a stock play that was severely underwater by 80%, the brokerage came to you and said, well, guess what? We're going to make you whole and your P&L is going to be zero. I mean, you're like, awesome. I'm going to sell it now and get out at break even. Okay. And then First Republic. So there was the Credit Suisse yesterday. That's what the market was all jittery about. Today was First Republic. I mean, come on, it is systemic. But what they're doing here, right, Bob, is they're plugging the holes. They're not doing, Bear Stearns, they let go. This time they're not doing that. They could say, oh, Bear Stearns didn't have the collateral. Yeah, but you just did the same thing with these guys. You just basically said, well, they don't have the collateral. Magically, we're going to make them have the collateral by saying that their bad assets are at par. So First Republic gets $30 billion in deposits from the bank. And then, yeah, essentially this is a costless bailout facilitated by the Fed in this situation. So throwing it back to you, Bob, the Fed made sure these banks were not going to be in trouble. We're not going to cause a systemic issue. And now Powell's in a position to kind of carry forward.
Yeah, I mean, look, I'm trying to, everything nowadays has a political bent on it. And then, part of my tinfoil hat on all this too is I think we have two camps now running in the world here. We have the America First camp, and I don't mean Trump America First. I mean, within the borders, we're going to control America's destiny. And I would say there's an international group that wants to control America like they have been for a long time. I put Yellen and Biden in that secondary camp. Powell's in the other camp. And I think there's been some back and forth here. I don't think it was any accident, Phil, that they singled out these two banks, Signature and Silicon Valley, for destruction. And they did it right after Powell went into blackout, right after Powell did his speech to Congress, I think with the hope that you're going to slow that rate increase train down. And so with this move today, if Powell's intention is to keep on keeping on, he basically just mollified the critics that say you're going to cause bank runs by keep making these assets more impaired. He's like, au contraire. As long as they hold them to maturity, they'll get them back at par. They can literally give me the money back. I'll hand them the asset and they can close it at the end of the term. We just absorbed everything potentially onto the Federal Reserve's balance sheet. So yeah, my thinking is that you can't be surprised if he does 50 basis points. Likely it's going to be 25 basis points because I think with the price of oil really stabilizing over the last 3 or 4 months, Phil, that I think he can, and this was our plan all along, you and I have been talking about this, 25, 25, 25 into July, and then he'll pause. That's what, at least what that's what SOFR is telling us in terms of when we think the Fed's going to pause. And I think this move with those two banks kind of, hey, we don't have to pause anymore. Now we can start cutting. And I think people are going to be sorely disappointed come Wednesday when he doesn't pause and he doesn't pivot. And I think what we'll do is we'll probably run up into that news, Phil, and then I think we'll get a pretty decent sell-off Wednesday, Thursday, probably into the end of the month, and then we'll have the second quarter action kick back up again. That's my thinking. And you know what? Look, if I'm wrong, that's fine. But don't go into this meeting thinking that he's going to pivot and pause, because I think the odds are more on my side and Trade Genius side, speaking for you, Phil, than the other way around it. I think people will be sorely disappointed. And I'm not the only one who thinks that. There's some other really, really smart money managers that are basically saying, hey guys, don't count on this. This is, he fixed this problem. And the big problem, Phil, is not going to come back until we start seeing those construction loans start to wobble and those commercial loans start to wobble. And then your thing you were talking about, then the big guys are going to be able to eat the little guys up. They're already in there. They already looked at the books. They've already picked and chose who they want. They're dating now. And now, JP Morgan has his hooks into First Republic Bank and whoever else they decide to do this to for the foreseeable future. And I think once those hooks are in, I don't think you get them back out.
Yeah. And the Fed fund rate futures, which is what everyone looks at to kind of give a nod as to what they're going to do, I've never seen it so wild. Up, down, pause, quarter, 50, 0, I've never seen it whip, because that thing usually is like a huge big barge and it takes, moves slowly, but for it to be whipping around like we're watching the stock market during the day, it's very odd. So yeah, I'm totally open for 50 basis points. That's where we were going. Basically, they were all but saying that ahead of last weekend. So I'm with you. Powell plugs the holes and he can continue on, because otherwise, he just got done being super hawkish in front of Congress. And what's he gonna do? Turn around the next week because of one weekend and then fold his tail between his legs? You start damaging your personal legacy, right? So right. I think that's what this whole week up until this point's been about. And I think you're right. He's going to continue on. So that means that we could see buy the rumor, sell the news event going into the FOMC on Wednesday. Our newsletters subscribers know that we're kind of overdone on the technicals to the downside here and into support. And so today's move up, not too terribly surprising. But I think the way that we moved up today, Bob, and kind of cleared the air above here. Now, we do have OPEX tomorrow, so there's a lot of shenanigans that can still happen going into tomorrow. But once those option expirations expire, a lot of the hedging activity that's creating some strange price action goes away. And a lot of times we'll get that post OPEX lift. And I think if we're really going to get like a 25 or 50 basis point hike, which the market ultimately doesn't really like, we could drift up into that and then get maybe a pivot off of that announcement and then kind of see how the market digests it from there. But like we've been saying, we're getting into that seasonal time now where markets like to kind of drift up into the end of March.
Yeah. And, here's the thing, Phil. So whatever happens on Wednesday is really not the move. So you just have to push out a week. So if he's dovish on Wednesday, you may get a sugar high, but ultimately people are like, oh my gosh, he's really scared, and you're going to get a sell-off. The more hawkish he is on Wednesday, the more likely it's going to be that he's going to be finished. And then once you get that initial goofy footed on the trade move, then I think they're going to absorb that and move higher. And so that's my view on it. And I think he has to kill the inflation genie, because look, I mean, the moment they talk soft at all, Phil, all the risk assets are popping. You know,
Yep.
you need a point where, like, when somebody lifts their hand, you want to put your head down, not
Yep.
you lift your hand, you don't care, you know. So he doesn't have that knee-jerk reaction on people
Agreed.
yet, and I think he needs to have that.
100% agree. Yep. All right, guys. Well, that's going to do it for this video. Thanks a lot for watching. And please hit like and subscribe, smash that notification bell, and set it to all. That really does help us out. That's important. And we'll see you on tomorrow's video. Take care.
Trade Genius.